Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us remotely are Ryan Issakainen. He is ETF Strategy with Trust Portfolios. We're going to take a look at secular growth themes to watch on the other side of COVID-19. Ryan, it's great to have you with us. Thanks so much for joining. And certainly we are living through unprecedented markets. What's your overview, thoughts on the environment right now?
I think that is a great word, unprecedented, and that's created massive uncertainty, uncertainty about corporate earnings, but also about how each of our everyday lives will unfold in the coming weeks, and uncertainty about the government's response. And obviously, being unprecedented, the specifics of the environment we've never been through before, but we have been through other environments where we've had massive fear and massive uncertainty. And I think back to the financial crisis of 2008 and 2009, the 9/11 terror attacks. There have been periods of massive uncertainty, and that doesn't make this feel much easier, but it does provide perspective for those that witnessed the recoveries in the markets that followed. So one of the keys for today's environment, in our view, is to really, in the core of investors' portfolios, focus on those high-quality companies, which may have the strength to make it to the other side of the crisis being intact. But on the other side, we also think there are certain themes that we'll look back and recognize that now is actually a window of opportunity for stocks that have actually gotten cheaper with the market, but whose longer-term prospects have actually improved in light of what we're going through right now. And in particular, we think of biotech stocks and cybersecurity stocks.
All right, and let's get into that with secular themes that you're going to watch, and certainly putting a spotlight on two sectors that really have been key to getting us through COVID-19 and how we're going to react once we do get through the other side. Let's learn more about healthcare first.
Okay, so coming into this year, we think the valuations for many of these healthcare stocks, whether biotech or pharmaceutical stocks, were relatively low because investors were a bit concerned that this was an election year and there was a potential for price controls. But they were viewed as greedy and profiteering, and they became political targets. And as this has unfolded, this COVID-19 crisis, the reality has become clear that these are companies that have been key to finding solutions, whether it's developing testing kits, whether it's been vaccine development that has already begun at an unbelievable pace, or whether it's looking at therapeutic treatments for people that have already become infected. These things are rolling out extremely quickly, and there's a number of great companies that are working at an incredible pace to bring these things to market, and ultimately those are going to be important solutions. And so, when we think about the near-term impact, these companies are in the news, investors and just the public at large are seeing their benefit to society. So when we're on the other side of this crisis, from a longer-term perspective, we think that this will demonstrate not just that these companies did some good work in the near term, but we think it makes them less likely to be targeted politically and therefore less likely to face price controls because these companies have demonstrated that their profits actually can be used to benefit society. And we also think that another benefit will be the speed at which the regulators have been able to approve some of these testing and treatments and vaccines will also have a longer-term effect potentially because there's other life-saving treatments that are working their way through the regulatory process. And I think there'll be increased pressure for the regulators to work more efficiently. And so as a result, we think that the biotech sector in particular will have an opportunity to have multiple expansion that may have been lacking over the last year or so. And then the other theme, again, is cybersecurity. And we think the importance of these companies will only be elevated by the fact that thousands of us are working remotely for the first time. A well-functioning, a secure internet has become the lifeblood of many of these companies. And so as we think about what could make a bad situation worse for the global economy, near the top of that list would be if the ability for companies and individuals to operate remotely was severed by cyber attacks, or if the public couldn't communicate with their public officials, or if there was false information sent out to create a panic. All of these things are being prevented to some degree by cyber attacks, but that doesn't mean that the hackers aren't hard at work trying to exploit vulnerabilities. So in the near term, these companies and organizations, as they think about where to potentially trim spending if the economic slowdown lasts longer than we're hoping, I believe that as they think about where those spending cuts could take place, I think that cybersecurity will be low on that list because they recognize that they can't afford a computer virus as the nation battles coronavirus. So in the long term, on the other side of this crisis, Jill, I think that the importance of cybersecurity spending will only be reinforced, and that will result in continued revenue growth for these cybersecurity stocks.
Yeah, Ryan, I would agree with you, particularly as our world's going to look very different now that we've been accustomed to working from home and what that means going forward. Now, to wrap up here, your outlook going forward, what's your thoughts on, I feel like duration is really the big outlier there. We don't know what that looks like yet. And also getting back on track, getting back to work. Do you think that's going to be a process or instantaneous? I think we have to be really careful about how we think about returning to what was our old normal.
Yeah, I agree. I think it's reasonable to expect that the markets are going to be volatile ahead because there is so much uncertainty. And the speed at which the economy and corporate earnings recover has a lot to do with how quickly things are able to open back up. And we all know that there's a balance between public health and getting the economy working again. But a lot of that hinges on some of the things that we're actually talking about, whether or not large-scale testing can take place and how quickly some successful therapeutics can be introduced, and also how targeted government policy is. An analogy that our chief economist at First Trust, Brian Westbury, likes to use is the economy is like a muscle that atrophies when it's not used. And the longer that muscle remains unused, the more difficult it is to return to full strength, and the more physical therapy you need to do to get that back into a full-scale functioning mode. And I think the economy is very similar to that. So the longer things remain closed, the longer the process will likely be to return back to normal and return to where we were before. That said, I think there's also reasons to be optimistic. Some of the innovation that's taking place in the healthcare sector in particular give us good reasons to be optimistic. And I think as the economy as America works together, there are good reasons to be optimistic. But that said, it won't be a light switch in our view. It will be a process.
Yeah, that's a great analogy and certainly something I will keep in mind. It definitely puts it into perspective. Ryan, thank you so much for joining us with the insight.
Thanks, Jill.
All right, and thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.